Welcome to the WealthWise Show. This program is for informational and educational purposes only and does not constitute investment, legal, or tax advice. Benowitz Wealth Management is a registered investment advisor in the state of Florida. Registration does not imply any level of skill or training. Listeners should consult a qualified professional before making financial decisions. Past performance is not indicative of future results. Now let's get started with the WealthWise Show.
Alrighty, welcome back, guys, to another episode of the WealthWise Show. I'm your host, Derek Johnson, and today we're going to be talking about the stock market as a whole and how you can understand when we go through market corrections or downturns. And so to get started, guys, this podcast is for educational purposes only. It is not meant to be taken as investment advice. It is not to be taken as enticement to invest in anything I mentioned. It is educational purposes only. Do your own research. Talk to your licensed financial advisor if you have one. If you don't, go out and get one. So with that being said, let's get into today's episode of the WealthWise Show. And today I want to talk about the stock market as a whole. In particular, right now we are in October. It's October 31st, 2025. And we're going into November tomorrow and then December. So the rest of the year is coming up. And the market is at all-time highs. You know, it's roaring. Gold is roaring. You know, crypto is going up. You know, all these things are going up and up. And eventually we will have to have a cool down. You know, I'm going to call it a cool down or a correction. And so one of the things that I want to show, usually I would do this in post, but, you know, less work for me to do in post because I'm a very busy man and I do a lot. And so I'm just going to pull up my phone. I'm going to pull out this chart of the NASDAQ 100 index, the NDX. I'm just going to show you. It's a monthly chart. And I'm going to show you how far we've gone up in the last couple of years. So if you see that, I know you're trying to catch my face, you can see we've been going up, up, up. And so the market is on fire. But you can also see down here at the little bottom, this little chart right here, that's also going up. That is what oh my goodness, crude. That is what we call, a lot of people in the industry, relative strength index. And so that's the index of the relative strength of the market. And you can see it's going high. It's almost at 80. And 80 means the market is super overbought, typically. And now that doesn't mean go sell your stocks. That don't mean tell your advisors to sell. That just means that, you know, the market is hot right now. And typically when the markets reach those areas, especially on a monthly chart, that usually give you an idea of what's going on, the mania. And most people, you know, if you're dollar cost averaging, that's fine. Just keep dollar cost averaging. You know, the point is not to change your plan. And that's actually the main the main point I'm trying to make in this episode is not to change your plan. When the market's eventually going to start going down, you know, it might go down fast. Usually when it goes fast, people really freak out because at one point they were up $1,000 or $10,000. Now they're down $15,000. And keep in mind, you know, when I say those numbers, if you've been in the markets for years, your cost base is really low, meaning you're still in profit. The market is just taking back some profit. That's it. And that's okay. That's part of the plan. You know, the markets can't go up straight forever. Eventually it'll cool down and eventually it will, you know, correct itself and then keep doing what it's doing. And so, you know, when you see or hear the news, you watch CNBC or YouTube or, you know, Instagram, you know, Twitter and all those things, and people start panicking, the ideal is not to panic. If you have an advisor, your advisor should be telling you, hey, don't panic. Unless there's something really to panic about. Like I said, we're recording this October 31st. We're living in strange times, so things can change. So that's why having an advisor is so important, because my job for my clients is to see the world, to see what's happening that may negatively affect them and their goals for their money. So that's my job. And so if you have an advisor, that's their job as well. But if you don't have an advisor, that means you're your own advisor, and your job is to understand and look at the big picture and try to, stick to the plan that you've made. And if you need to make some slight adjustments, and when I say slight adjustment, I don't mean change the plan. You might, say, you know what, I'm going to shave off, this is not investment advice. I'm going to shave off some profit and go put it in some bonds for X amount of years until, things calm down. And I don't know you. I wouldn't recommend that to you because I don't know you. But I'm just giving you an idea of how you can make adjustments to your plan, but the whole entire plan is still intact. So, I'm in the market for 20 years. I'm going to stay in the market for 20 years, but I'm going to make this slight, adjustment to make sure, I'm okay emotionally when the markets start going against me. So there's tons of things you can do. And so if you are not sophisticated enough to know a bunch of things, I'm not going to tell you because they can be dangerous. But there are tons of things you can do to kind of lessen the, shock of when you see the market go down. And so next year in 2026, there might be some headwinds, there might be some turbulation, but we just have from 2023 till 2025, so 2 years of, power action, straight upward momentum. And that is, pretty significant. Back in 2020, it was the same way. 2020 was the worst and best year in the markets. You have, the markets doing their, crash, and then it went to the moon. And then you have, same thing continued a little bit in 2021, and in 2022 it went down, and then in 2023 it started going back to the moon again. And so these are just normal things that happen in the markets. So nothing to really be afraid about unless you don't know what you're doing, unless you don't have a plan, unless you're just following what you heard on YouTube or, TV or whatever. And understand this is your money, you worked hard for it, so you can do whatever you want with it. But if you easily become afraid of every little correction that the market makes and only be happy when the markets are up, then you're missing opportunity. And so when the markets do correct, a nice little thing you can do is, understand that your plan is still intact. See, my brain is working because I ain't giving no advice. There's always, dang, how can I say this? A general rule is, if you're up, take a little bit off the top, and when it's buying opportunities, buy again, and how much that is totally up to you. All I'm saying is, if you're afraid of corrections, you're missing opportunities, because corrections are opportune time to kind of rebalance, rebalance your portfolio. And then also is opportune time to actually and get in good at different prices. So let's say you've been wanting NVIDIA for a while, not advice. And NVIDIA goes down 10%, I'm so sorry, 10, 15%. That's 10, 15% that, you additionally you would have paid if you bought it at the top. So if it's already down, don't be afraid. Goodbye. It's down. It's down. It's on sale, as they call it. Now I will only do that for good companies and indexes. I would never do that for companies that are trash. But only you would know what is trash and what's not. And so, there's tons of opportunity when the market corrects itself or go down. Even if people are screaming, this is it, we're never going to recover, blah, blah, blah. Humans have short-term memories. They forget a lot, and I blame the constant, doom scrolling and constant need for gratification and instant gratification and all that stuff, people forget. It's not the end of the world. It happens. Cycles happen. Every beginning of the year, something happens to make the market correct. The market recovers in the summer, and then something happens in the fall. Then the market recovers by the end of the year, and that's just what it does. So I'm saying all this to say, it's okay. Take a breath. If you're watching this and the market is red, relax. Don't look at your portfolio until, the following year. That's one thing that I like to tell people is stop checking. If you're not doing this for a living, if you got a 20-year plan, why are you checking it every day? And so another short and sweet. Thank you guys for listening. I greatly appreciate you guys, liking, commenting, subscribing. Follow us everywhere everywhere you listen to podcasts. YouTube, subscribe to our YouTube channel, The WealthWise Show. Subscribe to follow us on Instagram, TikTok. We don't have a Twitter. I don't think I'm going to get one. But Instagram and TikTok is fine. I might do a Facebook. Actually, I might do a Facebook. So follow us on there too, if we're not already there. And so I appreciate you guys. Thank you for listening. I've been your host, Derek Johnson. And until next time, stay wealth wise.